All right. What a wild week. A great week. Got a lot of great trades in. We were up and down, um, all over the place. And we were trading long, short, equities, options, agriculture, gold, Forex, trading it all. And one of the key things that we're using and we continue to use is are the seasonality profiles that are really guiding us into these trades. And it's the timing mechanism and the benefit of using these seasonality profiles is really important, especially in election years. So S&P 500 didn't really do much after the big waterfall sell-off last week from the 2019 close area and this Camarilla month R4 area. Went all the way down to this S3, Camarilla S3 pivot, the old September 2018 high, which is way back here. And this little rail guy right here continues to be some kind of resistance for S&P 500 futures. And we talked about last week that there was a high chance that they would try to pause the price right before it got to this really important February 21 gap, which is actually a real gap in the price from a weekend on February 21st over to February 24th. And you can see it more when you look at something like SPX, because futures have a drift. You can see that the gap is much easier to see compared to futures. That we went right up to the beginning of this gap almost, right before we continue to sell off. And professionals just, they really love to do this. They really love to take the price right up to it because it fools the most people into thinking that they're going to just keep going and take the gap the rest of the way. And I remember that we had an idea where we could have possibly made some kind of a V, that we keep hearing this V recovery, and then possibly make some kind of a handle down to here, Camarilla S3 pivot for the month, and then kind of shoot back up again is possibly what could happen. So we kind of did that this week, and then we just kind of died right on this month R3 again. So we do still have this island top that we got in the price, and we have not gone back up to close that gap, which is a good sign for more shorts possibly. The 200-day moving average was that target that we had, and that was the perfect target for the back test, and we closed those shorts. It was a huge day shorting that last week. So great day and great week to cap it off. We did really well in the chat group, and if you're not doing well, just stick to it. I was down a decent amount at the beginning of the year. I got really hurt in this area with a 12% gap down on a Monday, and locked into a trade on the way down because of the limits, the 5% limits that we kept hitting on the way down. And once you go in there, it's like a black hole. You can never get out again unless they take the bid back up above that limit. But if the bid keeps decreasing all night, you can't get out of your trade. That you physically cannot get out of it. So I got hurt in that trade, and a couple other people got hurt, and people that have been trading a very long time got hurt in that trade. And when I say hurt, I mean really hurt. Like 10% of your portfolio gone in one trade or something like that. And when you're dealing with millions, that's a lot of money, and it's really difficult to make it back, especially the psychological barrier to get back. So don't worry if you're not making money right now. Just stick to it, and we'll continue to ride these trends. So this is corn futures. So Robert in the chat, or I don't know his real name, Chad or Robert, he talks about some of these seasonality trades that we're looking at for softs, and in this case, corn futures. Corn futures on average for the 10-year seasonal profile. So looking back the previous 10 years, there seems to be, or just to give some background, we are at a very important inflection point in the futures space, in the equity space, in the forex space, commodity space. After this June FOMC, there's usually a big short that happens. We captured that last week based on that knowledge. But then there's a big rotation out of certain areas of certain sectors of the market. And it looks like one of those sectors is this corn futures, where we have a turning point after this FOMC, this quarterly FOMC, all the way down into the next FOMC, which is the end of July. So I did take a short, just a single contract, because I've never traded corn futures before. They move pretty slow. It's not that big of a risk for me, but I'm willing to step out on this big move to capture this. And if I can capture it on the June, I think I did the July contract is currently the front month contract for CME, and I'll have to roll it over probably towards the end of this, but we'll see. I'm willing to step out and take that trade. Dow Jones futures show that, and I've got the actual price action back here on a separate scale for Dow Jones, just kind of in the background. But what you want to focus on is the real performance of the year, which is fitted, and this actual 40-year seasonal profile showing the last 9 elections. And we were a little early with this sell-off that happened back here compared to where it was expected, where the yellow line actually is. And then the remainder of the seasonal profile is projected into the future with a smaller silhouette. So we shorted that last week on this FOMC date, thinking that this general top that occurs every year right around here is actually as a result of this FOMC date, which is kind of a floating date, maybe plus or minus 15 days, centered on maybe June 15th. We shorted that for a couple other reasons that I'll go into, and we expect that there could possibly be some follow-through into next week for a couple of days. And we just got a lot of bad news on the tape this week, so it looks like the news headlines are timing with this. So I don't know. I generally don't think that that's a coincidence. I think that the big hedge funds have buddies in the media, and they say, go find me some bad news so that you can put all of my trades in the money, and they go find some bad news. And that bad news this week that happened today was Apple closing stores in California, in North and South Carolina, and in Arizona, I believe, because of local virus outbreaks there. China is closing certain places of its country, as schools are closing again. So it doesn't look that great going in this weekend. We shorted into the close and got another great EMA ribbon short. So that's great. And I hold that short. We did the exact same thing last weekend. There's downside risk. There's not upside risk going into the weekend. My risk is minimal going into the weekend that there's going to be a gap up. And even if there is a gap up, the selling was so great today that the gap up will likely be filled immediately on a Monday. So futures were down at least 1% in some sectors. So the usual rule is if you're up or down on a Friday by more than 1%. So this is Russell 2000, NASDAQ, S&P 500, Dow Jones futures. If you're down more than 1% on a Friday, odds are you're going to revisit whatever low that you hit. On that following Monday. And usually the target is probably the Camarilla S3 pivot would probably be a good target to look for in the coming Monday session, either overnight on Sunday or Monday cash hours. So we're looking for a drop into next week for that big buying opportunity that we're looking for in late June, early July to start buying into this next FOMC date and possibly hold until September. If we look at gold, gold had a major rally today, getting above all of those big blocks that we wanted it to. mapped into seasonality really nice into this peak right here that we're looking for. We were looking for a bottom for the 10-year profile somewhere in late May, early June, and some kind of a big move finally that came up here. So we're a little delayed, but had some catch up today, and we went above all the major blocks that we had accumulation for the last 3 or 4 days. So that was great. I've been accumulating gold, micro gold futures contracts for several weeks now, and I closed some today near the high. So if we get back into, I always have to say, excuse this chart. This chart is only for dark pool block levels, and this is SPY. And remember that I said that on S&P 500 futures, we had a top last week very close to, where did my pivots go? Let's get those back. There we go. All right. We had a top that was very close to month Camarilla R4, this 2019 close, and one of the most important things was this top dark pool level from last December, December 20th. We had something like 40 million in late dark pool blocks from the previous day that all came in on one day. This was a great short combined with Camarilla pivots, combined with seasonality. Everything working in concert to generate this one trade. That was the whole goal of this trade, was to lock in that profit, and we had a big follow through the next week, and we said that this Monday gap down that we had, that there was a probability that off of this month Camarilla S3 and the month pivot that you can kind of see in the background there, it's in cyan, it's right on top of each other, combined with this earlier dark pool level from way back from, well, not way back, but earlier this year, February 28th, even greater amount of dark pool blocks in one day. And that was a day that we kind of just bottomed around here, then popped back up, and then the Fed intervention happened right here, sold off, and then has continued down again. But this dark pool level still has great meaning in the future. As long as it keeps working, we will keep using it as support and as resistance as long as they actually keep working. And even just a little bit below this are these huge blocks from December 2019 also. And there's just massive amount of blocks at multiple positions right here that are all clustered around the 292, high 292 to 293 level. So this is further support that we may need to. We filled this gap down here on May 22nd, but we could go down here, not sure. With this seasonality move that we were expecting for the 40-year election year seasonality, and I just added this election year seasonality feature in the Seasonality Trader and published it this week. You can filter by election years, pre-election years, and midterm years for any ticker, including ticker formulas, by the way, in TradingView. You can plug anything into there and it'll give you the seasonality for it. And that was one of the things that I was doing earlier this week. I was talking about the spread plays that I like to do, and one of them is go long one contract of NASDAQ 100 futures and short one contract of S&P 500 futures. And the reason why I'm doing these multipliers is because 1 point of movement on NASDAQ generates a $20 return, and 1 point of Russell 2000 futures generates a 50-point return. And since I'm long this one and short this one, I just subtracted two to get the spread. This shows an absolute value of spread of holding these two contracts. So if you started at the beginning of the year owning one NASDAQ future and short one Russell 2000 future, you would have gone up, then you would have gone back down and back up again, and you're up 40% on this trade based on your total position is up 40% based on the actual dollar value of holding this spread. So that's what this first y-axis means. It's the actual dollar value of holding this. So somewhere down in this area, we have an increase on average about, I'm looking at this right axis here where it comes down to about 0 and it increases up to about 23% increase from that position. So if it came down to 84,000 in value, you could expect something like maybe a $20,000 to $25,000 profit in return by owning this spread, walking forward in the future. And here's that same fall that we have going into the end of this month. So even holding this spread predicts that there's some kind of a fall towards the end of June where you really want to get into this spread. And I've been in and out of this spread this week, and I'm currently not in it anymore, but I'm willing to do it again because I don't know for sure if NASDAQ can just keep climbing the rest of the year. But what I can bet on is that NASDAQ strength will outperform Russell 2000 strength, and that's the same thing that we do when we are doing Forex spreads like GBP, which is what I'm currently in right now. I'm betting that I don't know for sure based on, are we repeating 2009 again? Are we repeating election year seasonality again? If we're repeating 2009, then the euro goes up a huge amount against the dollar. Same with the British pound. But I don't know for sure. I also don't know if I plug in the election year seasonality for the British pound, and I use ICE because ICE has the data that goes back the furthest, and I need 40 years of history at least to pull this in. So if we take these year Camarilla pivots here for a second, and these are going against the silhouette in the background, that's the gray bars. We bottomed on year Camarilla S5 earlier in the year with the flush. The big flush where all assets were sold, which is the reset. This is the exact same thing as Lehman Brothers reset that happened in October 2008. Everything got sold, nothing was safe. Everything had to get sold in order to raise cash to cover liabilities, to cover margin costs, to cover everything. And so people just started selling everything that they had. So if I take this off, you can see that in election years, something happens right around here. Again, we're on the cusp of a major turning point in the market at the end of June. So at the end of June, on average, there's a big drop in the British pound sterling all the way through to the end of the year, somewhere in December. And this I attribute to the Bank of England, which Bank of England statement, which happened yesterday, I think, and that triggered a 100 to 120 pip, no, a 100 to 200 pip decline in the pound almost immediately. And I'm still in this trade. And then at the bottom, the other day, I did another idea about doing euro long because of a repeat that could be happening for 2009. So I have this idea up, and I have this Euro USD idea up, and I go into why, and it's because back in 2008 we had the same flush that was the Lehman Brothers flush right at the end of 2008, and this is December 2008. And then the buyback of everything, so the complete reset and buying back of everything. This dollar buyback, and then the dollar, and this is the dollar buyback, so now we're looking at the dollar, United States dollar. And then another sell-off with kind of a 1, 2, 3 wave sell-off that probably fooled a lot of people thinking that this was a good buy opportunity. Popped up into June, somewhere around June 15th, and it was the last opportunity to short to the end of the year, and then a gradual meltdown all the way till the end of the year. So this meltdown means that the euro was gradually melting up the rest of the year from June 15th down to the end of November, 1st of December. So that is why I went long on the euro for a couple of other reasons. So fast forward to today, Same picture. Look at these two pictures right here. This is 2008. This is 2020. Big reset into the bottom in March where everything got sold. Nothing was safe right on this year Camarilla S3 pivot. Big buyback of the dollar. And then a 1, 2, 3 correction, just like we saw before. And this back test of this monthly Camarilla S3 pivot. So this is that type 2 trade. Breakdown through S4. Back test S3, then come back down to S4 again, which we really tried hard to do today with the euro, but didn't quite make it. It got up thrusted and flushed back down again, and then possibly that gradual sell-off until the end of the year. So I'm running 2 positions right now to hedge. One is the British pound short, one is the euro long, and I'm hedged in such a way that I'm effectively in a euro GBP position with futures, because I don't know what we're going to repeat. Either it's election seasonality or it's going to be this continued dollar sell-off to the end of the year. I'm kind of leaning to the continued dollar sell-off, to be honest. But I'd like to be prepared. So, a question in the chat was, no, you're not the only one. People are just not talking. We're still getting some more dark pool blocks in, by the way. So, 3 circle button on the top right. Well, that's okay. Participants, yeah, not that many participants. That's fine. But people can actually view it later, or they're just not logged into YouTube. Yeah, you don't have to be logged into YouTube to actually view the videos. So that's what we're currently looking at. The euro and the pound sell-off. Still in this. I closed the silver long, but it's still great. Still looking good. 21. I use these 21-day lowest close, 21-day highest close. Camarilla pivots again. Camarilla S4, week S4 combined with month S3, combined with seasonality, combined with 21-day lowest close. So, if you're catching on to my trading habits, I'm using multiple forms of information that are completely independent, but are really, really, really good at identifying bottoms. Just this S3 month and S4 weekly pivot for silver, and this is silver spot, not silver futures, is good enough for a trade for me. But to have the combination of all of them is even better. So this continues to go higher. Looks like we topped out on weekly Camarilla or R3. The same thing happened to gold today at the top, topped out right at weekly Camarilla R3, and that's where I closed out a little bit more gold. I'm taking off maybe 5 to 8% of my gold at key Camarilla pivots along the way. So one of the questions, well, let's see, what next? We've got the yield curve that is recovering slightly. And when I say recovering, I mean that it went back up again, meaning yields are actually going up with S&P 500. In yellow, I have S&P 500 futures. And in the background, I have many different yield curve differences. A yield curve is just showing you the difference in yield between 2 different bond maturities. And in these pink one, it's the 30-year minus the 2-year, so the difference in the spread. And the really important one is this orange one, the 10-year minus the 2-year. So back at the big capitulation that we sold off on, yield spreads spiked like something like this, which is unsustainable. There was a whole myriad of reasons to sell into that. And then it started to decline in advance of the S&P 500 top by about 1 or 2 days. That's usually a bad sign. When this starts to decline ahead of stocks, meaning the yield curve, it means that something bad is going to happen. It means usually, and all of these yield curves are against or yield spreads are against the 2-year. And if you see the actual spot 2-year here in purple, the 2-year started to gain or started to lose its value right around this location here. When the 2-year is losing value, it means that the 2-year bond is being bid up. So this yield curve is really great to have all of these on at the same time. In the chat group, you can just do a little command, I think, where you can do something like, what can you do? I think everybody has access to this. I'm not sure if everybody does. Let me see if I can get this. Nope, it's not letting me. There we go. So if you type in yield, you can actually get a yield output, and this will just dump a chart to the actual chat group, and that's how that works. So trying to add more features as I go along, but I've been extremely busy moving very soon, so that's just a whole nother story. So anyway, let's go back to some of the questions were, how do we do the volume spread analysis on analyzing the way that volume capitulations actually happen in the market when we're actually trading. So if we take a look at, let's take a look at the NASDAQ futures, and let me take a bunch of stuff off of here. Let me take this guy off. Let's take this guy off too. So in the background, the only thing I have are the Camarilla daily pivots. The weekly pivots, I'll take those off too. And we've got Gap Trader on here, and I'll get into that in a second. So one of the ways that you can look at volume spread is that when you're looking for some kind of a volume capitulation, what you kind of want to look for is a gradual buildup. Let me take some more of these pivots off. Let me take Gap Trader off too. This little area right here, that the Apple news came out somewhere right around here, or let's see, when did that actually come out? Let me actually search for it really quick. Let's see where that happened at. So Apple to close stores. This happened in Florida, Arizona, North Carolina, South Carolina. This happened at 12:14. So somewhere right around here, a little bit right where this volume started actually. So right at the beginning of that volume, 12:13 to 12:14. That's when this all happened. So you see how the volume accelerated more and more and more, and then at some point, the volume actually died off. So this capitulation, it's very far away from this. Remember, this ribbon right here is just the 4 and the 8 EMA on a 15-minute time frame, but I'm on a 1-minute chart. So it's showing me the 15-minute EMA ribbon as if I was on a 15-minute chart. So this is what it would look like on a 15-minute chart. It's extremely fast. It's very responsive to the price, and that's what we want. We want something very fast so that if we get stopped out, we get stopped out quickly. So falling away from the ribbon, and you can use many things to discover this kind of information. This was just too far away. This distance from the ribbon is just too far away. It's 100 points away from the ribbon. That's really far away, and even at the bottom down here, just too far away. 86 points, that's just too far. And that's kind of subjective knowledge, but you got to trust me on it. What you could do is use how many of these distances are you away, maybe between the 4 and the 8. How many of those are you away from the ribbon? And it looks like you're around 4 of those away. That's pretty far away. So that combined with this volume that actually started to die off and go back to normal means that I'm looking for a counter trade back up to this ribbon again. So what you could do is use this strategy, turn on the ATR trend, and I have it turned off right now, but the bar coloring matches this ATR trend. That's what the bar coloring is for, because I'm a huge fan of not using as many things as possible overlaid onto the chart in order to reduce the clutter. I need minimum clutter to trade, or else my brain plays tricks on me when I'm actually trading. So you could use this trigger right here to get back into the trade. Trigger a long, say that I'm going to hold this long until I get somewhere within this ribbon, place your stop at the low. Once you get far enough away, you can probably put your stop at break even, but not too close or else you get stopped right, you'll get stopped out again. So this is just, and in my experience doing this kind of stuff, I didn't even use a stop. And one of the reasons why is if I go to, let me see, if I go to the daily pivots right here, daily Camarilla pivots, we were already up and topped up. We went up to R4, came back down to R3, and I looked at this and I said, you know what? I'm going to take a gamble here and say that S3 Camarilla pivot for the day, given how far up we went, is probably going to generate a bounce. And I was right. Right on this S3 Camarilla pivot generated a bounce. So I stepped out here, bought right in at 99.40, front ran it just a little bit to make sure that I got in the price. Sold some right here as soon as this went into positive ATR on this ATR stop, and then took a little bit of profit and held the rest somewhere around here. And then a couple of us noticed that we had the exact opposite kind of move here up at the top. So this move, and then I saw this capitulation move up here that I just, this is the part where this is an art form. So seeing this, I thought, you know, that looks kind of like a capitulation. I went over to the micro contracts to see if there was any kind of volume. There was only a tiny amount of volume, so it didn't really make sense to me. It was, or it didn't really validate itself completely that it was another capitulation move back up in the opposite direction. But I was willing to take a shot at it right on this 15-minute 8 EMA. Remember, this bright white line represents the 8 EMA on a 15-minute time frame. And you can see on a 15-minute chart that right back there was actually a great time to short against this trend. It realigned with the trend again, did the mean reversion is what we're going for here. This is a mean reversion trade, meaning that it got extended too far down here and needed to mean revert back up to this area. And that's where this EMA ribbon on 15 minutes, on a 15-minute EMA ribbon, really shines. So got back in there with only a handful of micro contracts at this point short. And once I got the signal to short more, I actually shorted more. Took a little bit of profit on this target, which told me to take 56 ticks worth of profit, and then held the rest. And actually held it down to somewhere, I held it down to somewhere around here, is where I said, okay, that looks good enough for me. Because these were quick trades, and I'm just looking to get out of the trade. You could have held it much further down, maybe sold it at new lows down here again. Some of this stuff is an art form, but the volume capitulation is that information that you're looking for to decide that you want to get out of a trade, not only get out of a trade, but possibly take the counter trade in the other direction, because we still had a decent amount of positive momentum for the day. So if we take a look at Dow Jones futures, this is something that I wanted to talk about also. So if we look at, and let me pull up the micros, because this shows it a little. Actually, you know what? It shows it the same way. So here's that same volume capitulation right here. This volume spike area on the news, and you can see the price just dump down rapidly. So taking a gamble on a Camarilla pivot combined with the volume capitulation, combined with watching the volume actually subside, which is the key. You can't just get in early. You have to see the volume start to subside and go back to normal, which means that it's becoming a confirmed volume capitulation trade, and you can take a stab at the counter trade. So if I turn on Gap Trader again to show the previous close, and remember that get bar replay on here. Let me go back in the past to show what the previous close was as it was for this day. So remember, this is the 16-15 close, so it's not going to match the Camarilla pivots perfectly, but it's close enough. Remember that the Camarilla pivots are centered on the previous close, the actual settlement close. And this little X guy right here shows that we filled yesterday's close in cash hours. So we started out with a gap up at 9:30 in the morning compared to the close yesterday at 16:15. You can see that if you plug in like DIA or DJI, gap up, and came down to fill the gap later in the session. So a gap up. So it's showing you the close from a certain window, and the window that we're looking at is the window from 9:30 in the morning to 16:15 Eastern time is the window we're looking at. Oops, let's see. Let's go back a little bit further in time. There we go. So this yellow line is the previous close, and I wanted to talk about something important here. When you see capitulations like this, there's a chance that, based on the Camarilla pivots, that we were going to go back up, retest the close again, and you can see how the previous close just keeps acting as resistance at this point. So closes have value because the dark pool levels live there. Even though dark pools are from the previous day are done all during the previous day, they show up on the tape as the previous close because the NYSE tape doesn't know what to do with them, and it just logs them in as the previous close. Those are the late blocks that show up from the previous day, and they are always shown as the previous close price. And that's where things like this chart come into play. These previous close block trades that we look at, we catalog them, and the TradingView programs that we have available can actually show us where these levels are in the past. So if we look at something like, if we show the bot in, let's see, if we go back to this and we show the block summary for SPY for the previous day, we can actually see where this level is, and this one is the close right here. These are the dark pool blocks that represent the previous close, which totaled nearly 10 million at 310.46. So if we go back to SPY and look at like maybe a 5-minute chart here, 310.46, take off extended mode. Well, maybe it's not 310.46. Oh, dividend. That's why. There's an extra amount of dividend. So that's what we're dealing with, and that's why we use those previous close levels. But what I wanted to get into is there's usually a chance with the Camarilla pivots that when you do something like this, it's going to generate a counter trade, and many times a counter trade off of a Camarilla pivot like this is going to be right back to the previous close. So what happened again is we had a near miss of this S4 pivot after already going all the way up to the R4 pivot. So when you see a range like this explored this way, what you can look for is a counter trade back to the previous close again. And what this would look like as a daily candle is you started out at the previous close, went up, went down, and went right back to where you closed. And if you saw that at this point in time right here, right at this location here, the entire daily candle would have represented a doji candle. And that's what they love to do indecision candles for the day. And you would have had something that looked like this. This would have been your entire daily candle, would have been something that looks like this. And obviously I'm just doing this, it's not to scale or anything, but the doji candle would have looked like something like this. They love to do this with the Camarilla pivots, and I've seen it many times before, and the next day is actually a huge day because they made it an indecision day. That is not how we closed today. We went right back up to this close only to dump down all the way and make new lows. So this candle today is not a great candle. It's showing that there's severe weakness, and if we go to the total amount of blocks today for ES. If we go to, if we check out ES today, somewhere around here there were live blocks. And let me get the ES conversion. So anything here with a dot next to it is a dark pool block. Anything else that doesn't have that is a live block. So there were several 1.35 million SPY blocks that happened right around this area. It says 3126. Somewhere around, let's see where those were. Somewhere around here. There were 3 of these that happened back to back to back, all near the same price. And this was right before that Apple news was coming out. So this was really important. And we had the sneaky blocks that were the ones that were somewhere up in this area that were nowhere near the price of today, showing some kind of weird hidden blocks that were all sold in excess of something like 6 million. And I'm looking at this level, and it says that it's 3150 about. So somewhere around 3150, and the equivalent level was something like what? Up here I'm looking at it, 315.04. There were a whole bunch of these that happened, and it looks what it looks like is a huge cluster of blocks that all happened at somewhere up here at 3150 or something like that. And there was a huge cluster of blocks that all happened at the same time, and some of them were bigger than others. So if you look at like a block map and you order the blocks, if you made a circle and the circle represents the size of the block, they look like this. A bunch of concentric circles that all occurred at the exact same price, that all hit the tape at the exact same time. Something like 20 of these, all at the same time, hit this 3150 level right around here. And then shortly after that, we had these 3 1.35 million blocks that all hit the tape somewhere around 3126. Some of those are captured in this right here. This is just aggregate at a single price. Remember that the bot here does aggregate at the price of the actual block, so it sums all the blocks at a single price, and then another one somewhere around 3126. Up here you can see these prices that it was just a crazy amount of blocks that happened all at the same place. So this was really peculiar because 315.04, if I look at SPY, even in the extended market, it got nowhere near. Well, it got close, but it did not reach this location. And that makes me think that, I don't know, but I've never really understood these blocks, to be honest, because it's not from the previous day. The rules for dark pool trading are that you have to start the trade and within 24 hours complete the trade. So if they started the trade yesterday, it would show up at the previous day's close. It did not show up at the previous day's close. That's what these blocks are right here. These 9 million in total at 3104 or 310.46. That's what those blocks are. So it wasn't a previous day sell. Somehow it was a hidden block that I have no idea how it actually happened. And what I'm thinking is going on is it's some kind of a separate exchange that's doing some kind of an under-the-table deal with some other broker that's saying, "Hey, we'll sell you these shares," or maybe they have an exercise or a deal with them somehow to do it. But I don't know how this happened. But this is where they all occurred, is somewhere in the morning, right around this time, 10 to 10:30 in the morning, and then shortly after that had all these. So I was looking at that and saying, you know what, this looks like a big sell, and something's happening here. Something extraordinary is happening, and then we started shorting and then captured this move. Great move to capture, great day, and then took some profit here, and then I actually re-shorted somewhere around this area on another retest of the previous close. even for S&P 500, I believe it went back up to that previous close area. Yep, this previous close where this yellow line is, and kind of went back up there only to die again. So really interesting stuff happened today, and I would expect nothing less from an OPEX day. We went OPEX and quad witching is where you have you have the equity futures contracts like ES, like what we're looking at right now. We were on the M contract before. M contract is, I don't know what it's doing right here. This is crazy. M contract is over for equity futures, and for FOREX futures is done today, and officially that is completely expired on Friday today, and equity options on those futures also expire, and S&P 500 quarterly options expire, and that's where the quad witching actually comes from, for the reason why they actually call it that. So that's kind of how I use the volume capitulation to get in and get out of a trade, and know that you need to make a choice when you see this kind of a volume, that you cannot expect there to just be, infinite downside on a trade like this. You really have to be smart and get out of this trade, step back, and then wait for a re-entry, and that's where the 15-minute EMA ribbon really comes in handy, because it forces you to wait for the mean reversion, which is somewhere inside of the band, and then possibly get back in short again. So let's see if I can talk about anything else here before we have to go. Covered the mean reversion trade, covered the S&P 500, or the Dow Jones mean reversion trade, which is really important to know. Another example of that is if we look at the euro. Huge hit on day Camarilla R4. Massive hit on this, and it's still in a downtrend. And one of the ways I can show, let's actually take this. Let me take this chart over here. Let's use this chart instead. Still in a downtrend, so I could be wrong about that euro long here, but I'm okay for now. We're on this daily ATR stop, and I'm okay with being on this stop right here. I'm okay with it. So if you take off a couple of things here, and look where I went long initially was somewhere around this month Camarilla R3 back test, and this is the same trade that I talk about, that is the breakout R4, back test R3. So that's kind of where I went long earlier, and I got a nice movement up, but then I re-looked at it and I said, I don't know about this thing, because it's still in the downtrend according to maybe the 4-hour ATR stop. So if I put this 4-hour ATR stop on here, we can actually see that this guy's currently in a downtrend, and I really like using this with the daily Camarilla pivots. Went right up to that R4 and died, and immediately came down again. I should have known. I was looking at it, I'm like, this looks funny to me, because the pound is still going lower mostly, and this is just shooting up for no reason. They could be setting this up for a short, and sure enough they were. So right around this point down here is when I said, you know what, maybe it's time for me to step out and say, this went up to R4, almost got down to S4, and combining that with, let me get something else here. One more thing. So if I change this to day, combining that with this day ATR stop, I was looking at this and saying, you know, I might actually step out and do a counter trade long here for the same reason that I talked about before, where you have a R4 hit, a near S4 hit, got really close, and then there's going to be a chance where you actually retrace to the previous day's close, which is right in the middle of these pivots. So the last price was right here. This is the previous day close. This yellow line is the Thursday close. And sure enough, we went right back to this previous day close. And right at this point, the entire candle for the day was a big doji candle. But then it started going back down again. So I just basically effectively lowered my long position because my first long was somewhere around here. I went in with 2 more contracts here and then sold them when it got back to the previous close. Made a profit on those 2 contracts and just left my single lot open. I'm not doing any more than 1 lot on this and 1 lot on the pound because I have so many other big positions open right now and I don't want to go against the total margin that I have available. So next week, just to recap, looking at a bunch of trades here, looking at, you know, some softs, looking at some, you know, some DJI trades that we're looking at for the seasonality, and this is kind of the expectation. We closed beneath a lot of dark pool prints today. So the total amount, if we do the block summary for indexes, and I bring this guy up. So if I bring the block summary for the indices up and I do block summary index, we're going to get a large amount of blocks thrown back at us, and combined with the dark pool blocks that are in the with have the dot next to them and all of the live trades today. And this is just classic OPEX with just tons of blocks, and not just that, blocks on if we look at the blocks on the block summary report today that happened at that we should have got at 4:15, but did not happen. Let me see here if we can get this. So let's see. Combine this with the stock block summary today. Let's see if we actually can get this guy to pump out. There we go. This stock block summary, we just had across the board blocks, huge blocks in Disney. That could be important. There could be a huge short there. Merck, CVX, GE has had lots of action the last couple of days. Even a big Facebook block, a 1.2 million Facebook block. DuPont, Morgan Stanley, IBM, and Telegram runs out of room here and stops formatting, so it looks like that. So, and then the dark pool summary, if we take a look at that, got dark pool blocks in BABA today, so that could be a great play going into the next week, and a lot of gold action in the last couple of days, and that's great. SQQQ, which is the inverse triple leverage QQQ fund, inverse triple leverage NASDAQ 100, looks like buying activity. They bought low, and they're currently in this trade. The green heart and showing you how far above we are these blocks, and that means that we're 3.2 and 2.7% respectively above that. Action in VXX, so dark pool action in VXX. So they were buying yesterday, and this is actually we closed well above those blocks. So it seems like we can have some carry through into Monday. Lots of action on SPY, QQQ, DIA, and IWM, the 4 big ETF indices, and all red, closed below all of them. So going into Monday, very likely based on this analysis that we could have a gap down over the weekend. There's a lot of downside risk into the weekend. So getting back to the indices, lots and lots of blocks on SPY. Just a huge amount of blocks. Huge amount of selling on Russell 2000. QQQ had some final maybe buys, or maybe this is profit taking towards the close. but we're still kind of around those blocks. The big dark pool blocks that we care about are the ones that they sold, and that's kind of what I'm looking at. This looks like the previous day right here, so we kind of closed somewhere around there. And this is showing extended hours. I believe this is showing extended hours information. Is extended false, so not showing extended hours anymore, so it's not showing what happened at the extended hours for QQQ, but for SPY it is. So these blocks are actually, the price levels are reported with respect to the extended hours SPY price, is what that means. So you can expect, for some reason, QQQ is not sure why, but IWM and SPY are showing that. So the current price levels that you see here with the reporting of where the price is currently with respect to these blocks, and this guy right, and some of these are showing that we're 2% beneath these blocks. So big sell day. Okay, so let's see if we can get this seasonal move into the end tomorrow, and see if we can actually, not tomorrow, but into next week, and see if we can get this buyback that we're looking for. And just to make sure, we still have 200-day moving average support for S&P 500 futures. We might not go down that far. We might just hang out. And then no matter what, I'm going to start building those longs, and I'm going to build them into the end of the year. And I am definitely going to try to use a formula like this so that I can be protected going into the summer months, so that I don't know if we're going to perform this election year seasonality move. But what I can definitely hedge myself against is that Russell 2000 is going to outperform, or NASDAQ is going to outperform the Russell 2000. And I'm using just a one-for-one contract spread here. One contract long NQ, one contract short RTY, and just see where it goes. All right, if anybody has any questions, I'm going to log off here. And if nobody has any questions, then we're out. Well, then we're done. Okay. All right. Everybody have a good weekend. Great week. Solid week. Good trading. Come back fresh next week. There's going to be some great plays and great preparation to get into some long-term trades, possibly until end of August or early September.